Now let me go to Dave McCarthy from McCarthy and Associates, who sits opposite me today. Dave, good morning to you.
Good morning, Keith, on this beautiful sailing morning.
It is a beautiful morning, so it is a lot of questions in today, but one of them happens to be the central bank finally takes action on payment protection insurance scandal. What is this payment protection insurance scandal?
Well, basically, you may recollect over the years, Keith, I've been warning people about taking out payment protection insurance associated with credit cards, term loans, mortgages, and to be perfectly blunt about it, these policies have had a terrible claims experience, and there has been I suppose if you like, a volcano waiting to explode in the financial industry regarding the sales of these policies, because I believe that an awful lot of them are missold.
So why do they sell them if they're not doing what it says on the tin in the first place? And what recourse do people have?
Well, basically the background here is that in the UK, the Financial Services Authority undertook a major investigation last year, and the upshot of that was that they fined UK banks, not millions, billions, in relation to the mis-selling of these policies. They force UK banks to recompense customers in relation to the premiums that they've paid.
But that's fine, but that's no good if they want to invoke the premium and to get the payments covered that they wanted to get covered.
Well, that's where the root of the problem is.
It's one thing taking the payments from people,
yeah,
but then if it doesn't cover the payments that they want covered.
And that's the reason why the central bank here are investigating the policies, because the policies, in terms of people's awareness of what cover they had. For example, you have self-employed people who were sold these policies, and one of the claims that you would make, or conditions that you could make a claim under one of these policies, was in relation to redundancy. So a self-employed person can't be made redundant. Were they aware of that when they bought the policy? People who had pre-existing health conditions who took out these policies where there's a death benefit, which again is another one of the clauses where you can make a claim. And the third one, which it was supposed to cover, was also in relation to prolonged illness. So there's a huge number of issues here, and I believe that that there's going to be a major announcement in the coming months, and I do believe there are a lot of people out there who will be recompensed. Keith, I reckon there could be 300,000 to 400,000 of these policies sold over the years,
and of no use to anybody.
And a lot of them, the claims experience is very poor by comparison. I think that the average claim, and I'm not 100% on this, in experience, say, on a house policy, is that about 45% of premiums are repaid in relation to claims. In where these policies are concerned, the claims experience is something like 5 or 6%.
That's very bad.
So it'll just tell you there's a question there over whether or not...
So how are they getting out of paying people back? If they shouldn't have sold them in the first place, but if they have sold them, is there not a legal case that, I suppose, that people can't afford to take the legal
that's
case?
What the investigation that the central bank are conducting is about.
Could the central bank force them to pay out?
Yeah. That's what they did. The Financial Services Authority did in the UK.
In the States from there. Can I go to the Ulster Bank situation, by the way, and all that's going on there? And it's still ongoing, so it is. And they're talking about compensation and all of that. What's your quick reaction to what's going on?
I have to say, I'm speechless. I can't find words to describe it. I mean, banks are like military installations in terms of the type of backup systems that they have. I mean, this type of situation should have only occurred in the event of, some major, I suppose.
Now they're blaming a glitch. I was watching the wires this morning early. They're blaming a glitch in Edinburgh. So all of our payments have been, and this whole thing, debacle unfolded in Edinburgh.
Well, I mean, it doesn't really matter what they blame at this stage. It's just unfathomable to think that any bank finds themselves in a situation like this, and the people who are suffering, obviously, are the customers. And I think a lot of heads are going to roll as a result of this, because this is coming from the UK. And unfortunately, it seems, which they've admitted, that Ulster Bank, in terms of the Lloyds group of companies, are the bottom, are the last people to be looked after. Or I should say, RBS group of companies, we're the last ones to be looked after.
Can I finally ask you in relation to banks, Barclays Bank, what's going on there?
Oh, Barclays is to do with
basket case.
Yeah, I won't get to it. It's very technical in terms of what they were doing, but basically that there's allegations in the UK that they were fixing interbank rates back some years ago, and it's I suppose in essence market manipulation.
That's grossly anti-competitive, and
this is
the competition authority, I'm sure, will be having it.
Yeah, well, there's political issues in the UK over this, as you can see at the moment. I mean, there was a Common Select Committee yesterday, had your man Bob Diamond time, the former CEO who's now resigned hauled in front of them to explain himself. Just want to mention too, I don't know if it's got anything to do with the Volvo Ocean race, but I'm sure it hasn't. But we should get some good news today from the European Central Bank, because they're likely to drop interest rates by 0.25%. So to go down to an all-time low from 1% to 0.75%, obviously that's going to feed through to people who have variable loans, variable rate mortgages in particular. Anything is going to be a help for us, but hopefully we'll see an announcement at lunchtime on that.
All right, thank you, David, for joining.